Fed doesn't want to lose credibility. They're trying to regain credibility by getting back to that 2% target, unless they can come up with some good reason, scapegoat, as to why they can't do that, potentially like multiple wars. You kind of shook your head in disgust when I said that. So if you want to address that, you can. But then you had said that you think that maybe this bull market in Bitcoin has already started, which might be controversial for some who think that there's this massive macro picture that's going to crash everything down. So maybe explain that to me.
Yeah, one thing, this prior bull market was really shortened or curtailed. I think, people have put out a lot of reasons, but I think the main reason was that the Fed ended this unprecedented period of 15 years of zero interest rates. And I think when there are positive real interest rates in the market, that's generally bad for competing monetary goods. And the classic example of this is gold. You go back to the 1970s when gold was going through this decade-long bull market and parabolic move in gold, very similar to one of Bitcoin's bull cycles. The graphs actually look very similar. These hype cycles are almost identical. Then Paul Volcker, the central banker at the time, really was determined to get inflation under control and set interest rates close to 20%, I believe, and had very real high positive real interest rates. So you would earn money, you would earn real value by keeping money in the bank. That's generally a period of time which is bad for competing monetary goods, and it was really bad for gold. It was bad for gold for 2 decades. So I think the same thing happened with Bitcoin at the end of the bull market. How long can the Fed go along with this? I think that's an open question. But I think
About to that point real quick though. So if you look at like Bitcoin's history, which isn't super long, so it's not like, super conclusive, I guess. But if you look at like the halving market data, for example, we can see that on every halving, the peak of Bitcoin is 18 months after the halving. So far that's been true. And I, going into this last event after the halving, knowing that it's 18 months, but we had all thought maybe the price of Bitcoin would be, 150,000 or wherever it was going to top out, right? And I have Michael Saylor in the back of my ear going, "Oh, all your cycles are broken," and you see the big institutional adoption coming in, and so maybe it would be higher. And so then as we get to this November date, this 18 months after the halving cycle, I remember thinking, this can't be it. No, this cycle is going to be broken at this point because the price should be so much higher. And right on cue, right at 18 months after the halving cycle is when the price dropped. And yes, it was with the Fed's announcement that they were going to start raising rates. Now, they didn't actually raise rates until they announced it in November. They didn't actually raise them, I think, until January after. But just the announcement was enough to move the market. But anyway, is that just coincidence? Do you think that it just happened to be right at the 18-month mark, or is it more of the halving cycle?
Yeah, I had the conversation about this with Stefan Livera on his podcast as well. I think there are two factors at play. There's the internal Bitcoin market dynamic, and I actually believe the halving is a real driver of price movement. I think the halving will be again, because the market in the bear market has to find a plateau where there's an equilibrium between supply and demand, and we've had that equilibrium essentially for the last several months. But then the halving comes along, and it really is this huge supply shock where the supply is halved. So the amount of fiat money that needs to come into the Bitcoin market to maintain the current price is something like, I don't know, $40 million a day. And then suddenly you only need half of that, but the demand, the people who are buying Bitcoin, that demand doesn't halve. It's still that same level, and that supply shock makes demand above supply, and it starts moving the price up, and then it starts feeding on itself, and then you get the madness of crowds phenomena. So I think there's that internal market dynamic, but I think Bitcoin now is big enough that it's a macro asset, and it is affected by macro factors like interest rates. So I think both of those things are at play. I would probably say the 180 days is a coincidence. My strong belief is that it was really interest rate led. I think the Fed hurt all risk assets, all interest rate sensitive assets, and I think Bitcoin is an interest rate sensitive asset. But Bitcoin also has this internal market dynamic, which you're talking about, which is the 4-year halving cycle, and I think that's still very powerful, and I think it's going to trigger the next bull market. But for me, it's not just the fact that we're approaching the halving, it's just looking at the price action of Bitcoin. That price action tells a story, and it's telling a story that bad news is not hurting Bitcoin. In a bear market, good news does not help. In a bull market, bad news does not hurt. And so when you see that price action, you know we're entering a bull market. And there's been, plenty of news that would normally knock Bitcoin down, but the price keeps going up higher and higher and higher. Then there's other factors as well that could be propelling it, including the potential approval of an ETF, which I think will be a good market catalyst. But it's undeniable. You look at the price action of Bitcoin right now; it looks like it's ready for a big bull run.
Yeah. One chart that I've been amazed by, you mentioned real rates earlier, and you can look at charts with inverted real rates, and it's like lockstep with gold. I mean, since the last couple of decades, gold and real rates have just moved almost in lockstep, and now there's this massive divergent. So there's something going on there that tells us something, right? And then you look at other factors like this narrative shift, if you will. Larry Fink, the largest asset manager in the world from BlackRock, came out and said people are running to Bitcoin for safety. Like, to hear him come out and say that. And so I think that's why gold is diverging, right? I think people are starting to realize, and maybe not in the United States, but the rest of the world is like, we don't want U.S. Treasuries, so we can see central banks are net sellers of Treasuries and net buyers of gold. And so it's causing this divergence. But I think it's also Bitcoin and gold sort of moving in that way. Just to kind of go back, so back to the halving cycle, if the Fed would have announced they were going to raise rates a month later, then this whole 18 months after the halving would have been broken. That'd have been your base case.
Yeah, I honestly believe if the Fed had maintained zero interest rates, say a year longer, we would have probably hit 100,000. That's my belief.
Yeah. Yeah. All right. So do you think it did maintain its halving cycle kind of structure? Do you think we're back into this halving cycle structure again now? So now we're about a year and a half before that, or?
I think so, and it's really remarkable. You look at these price charts for each cycle, and you overlay them, and they're eerily similar in terms of timing from halving. Just as you use the halving as the anchor point. And Satoshi did something incredible, like choosing this system where we had a 4-year halving. You could almost imagine that this 4-year halving, if it had been some other number, it might not have had the same impact. It's almost like 4 years is enough for the pain to be forgotten of the previous cycle and the enthusiasm to rebuild. He almost tapped into some human psychology here to know what the ideal time was for creating these supply shocks. If they had been every 6 months or so, I think it wouldn't have had the same impact as it does.
Yeah, that's a good point. I didn't really think about it like that. But, typically I started my career in real estate investing, and typically the old adage was, don't buy a home unless you plan to hold it for at least 5 years. So you sort of like these 5-year, you have these longer, maybe 8-year business cycles. And so to your point, they're sort of long enough. I hadn't really thought about it that way, but from a psychological standpoint, pretty interesting.